Are the markets gearing up for a big move this week, and will Tesla's earnings be the catalyst? Join me in this week's market mealysis as we cover big picture patterns and targets for SPY, QQQ, IWM, Bitcoin, and more. Nothing I say is financial advice, and you should always consult a licensed financial advisor before making any financial decisions. Welcome back, cool cats. I got a brand new laptop, and I'm hoping it will instantly improve my video quality. And once you've watched my video, please let me know in the comments below whether or not you noticed a difference. With technical analysis, you're always working with a moving target, trying to figure out what something is or isn't, and patterns can morph. So point in case, what initially appeared to be kind of a miniature falling wedge pattern, as you can see the upper resistance line there and the lower support line here, now actually appears to be showing a minor bearish channel as more price action has developed. As we can see here now in yellow, we've got two touch points here on the lower support line, and we've got two touch points on the upper resistance line. And if this is really a bearish channel, eventually they do tend to break to the upside after sentiment shifts. And I don't think it's just a coincidence that after hitting this very key trend line in orange, which as you can see goes all the way back to July of 2023 and goes through all of these major periods here, I don't think it's just a coincidence that after touching that, it formed that minor bearish channel after hitting that area of liquidity. Zooming back in on the 4-hour time frame, notice how SPY still has only made it up to the 50% Fibonacci retracement here from the all-time highs back on February 19th. It broke down from this wide minor bullish channel in orange after touching that key trend line in orange. But it's now resting on this key level of about 526 in blue and just above the previous resistance line in purple of what we said in the last video could actually be part of a symmetrical triangle. And notice where the apex of this symmetrical triangle is, where these two trend lines converge. It's on April 22nd. And if you don't know the significance of that date, don't worry, we're going to go into that into the rest of the video. And all I'll say right now is if we have a bullish catalyst on that day, this nested symmetrical triangle could break out to the upside, also validating the bullish megaphone pattern that we covered in the last video here. And please check out that video if you're not sure what all of these nested patterns are. SPY has to break above this key trend line in green that has pushed the markets down ever since February 21st, around 550 on Tuesday. And if SPY can't break that downtrend line because perhaps we get a bearish catalyst, this could theoretically drop to the demand area sitting around 495, right around here. And if support can't hold up in that area, we could actually break the recent lows. And if we assume that this right here was a false breakout of the symmetrical triangle, when we bring our measured move up to that area, it would then be targeting about 465 to the downside, which as you're about to learn would also be targeting the lower support line of QQQ's main bullish channel. And just real quick, if y'all are interested in it, I'm contemplating making a short video showing just how often price bounced off of each of my lines. For those who say my charts are cluttered, I can prove to you I have a very good reason for it. And if you'd like to see that, please let me know in the comments below. QQQ has slightly different price action than SPY. You can see that it had this false breakout on April 14th, and it tried to hold back above it the following day, but then it broke back below this resistance line here, and then appeared to be forming a kind of basing structure between Wednesday and Thursday. If this really is a symmetrical triangle and it breaks to the upside, we're looking at a target of roughly about 529 to the upside. But if it were to break down, we'd be looking at a target of roughly about 385 based on this measured move. And just like I've shared before, that would have QQQ touching the lower support line of the most significant channel that it has never broken before, going all the way back to October of 2008. And for those who watch my analysis regularly, I apologize for revisiting this, but it is so important that we realize just how significant this lower support line is. And we would actually be touching that line if we fulfill that pattern target. Patterns always target areas of huge liquidity, and I've witnessed patterns appear to break out in one direction only to reverse before, and when you move the measure move up to the false breakout, now it magically is targeting that lower area of liquidity perfectly, and I don't believe that that's just a coincidence. Until proven otherwise, I still say that IWM looks like it's in a wide bullish megaphone pattern. And if that's the case, it will have to break the strong descending resistance line here in yellow between somewhere about 195 to 198 this week. If it gets up there and it can't break this resistance, it could legitimately fall all the way back down to the lower support line in light blue somewhere around 159. Granted, there are key support levels around 182, 170, and then 162 as I discussed more in depth in my last video. I'm really glad that I'm getting to go over Bitcoin today because I can use it to prove a point. We've been going over this multi-month bearish rising wedge in white for weeks, and as I've shared, the downside target is roughly 60,000. If it plays out fully to the downside. If you watch my channel regularly, you know that I frequently say that the initial breakout or breakdown on a pattern is often the most explosive, which is often then followed by a period of consolidation or an attempt to go back to the pattern and invalidate it. Then, once the bulls or the bears realize they've lost, the pattern will continue to play out. Well, if we look at Bitcoin, we can see that that's exactly what's happened so far. We basically got right to halfway of the target. Then the bulls decided it was time for them to have a turn. As we can see here, we have very obvious bullish divergence on the daily time frame, where the RSI made a higher low, whereas price had made a lower low. And Bitcoin is already in the process of trying to break this downtrend line that began on Friday, February 21st, just like the rest of the market. However, notice on the daily time frame how the RSI is already close to overbought condition. Although Bitcoin had appeared to be forming a very clear bearish rising wedge over the course of multiple days, it seems to have invalidated it by forming this double bottom and pushing a little bit higher, but it's not out of the woods yet. On the 2-hour time frame, we can see how it's formed this hidden bullish divergence, where the RSI makes a lower low, whereas price has actually made a slightly higher or equal low. This usually leads to one last pump up, followed by an even bigger move down, and it has to switch this previous resistance line in yellow into support, or else it risks breaking back down. And false breakouts tend to have even worse subsequent breakdowns because you've exhausted the last little bit of bullish energy, plus the bulls that just got trapped freak out and sell first and ask questions later. So I think if Bitcoin can break this yellow resistance line, it could head back up swiftly to fill this fair value gap from February 25th around 95,000. But if it can't hold above this resistance, Bitcoin could easily be headed back down to the recent lows of about 75,000. And if those got broken, the next area of liquidity is around 68,000 as I've shared previously. My analysis on TLT hasn't really changed since the last video. We broke above this key level here in purple around 87.25, but then we hit this other trend line in orange around 88.50 and rejected. And now we're bouncing around like a pinball before we can make a break in one direction. As you're going to see in the rest of my analysis in this video, I have strong reason to believe that longer term yields will break in one direction this week along with the rest of the markets. Taking a look at the VIX, I don't use it nearly as frequently as I probably should, but the TTM squeeze indicator can be a very helpful tool for identifying squeezes and volatility that are about to break out. Notice on the 2-hour time frame how a squeeze started forming on April 8th before we got this huge move down on the VIX, which is denoted by these dots right here turning from green to red. And now we've had a squeeze forming since April 16th, as you can see right here. I won't go into a lot of detail, but the TTM squeeze indicator actually combines the Keltner channel and Bollinger Bands into one. And anytime that the Bollinger Bands, like here in blue, are inside of the Keltner channels, which are here in purple, it lets you know that volatility has contracted significantly and price is about to break out or break down aggressively in one direction. And we can see right now just how contracted volatility actually is. And this is why I believe that this week we're going to see a real breakout or breakdown in the markets. And I gave an even more in-depth breakdown of what could be occurring with the VIX in my last video. If you'd like more details, please check that out. Looking at Dixie, the dollar strength index on the 2-hour time frame, as I I covered in my last video, Dixie broke below its bearish channel here in light blue on Thursday, April 10th, and has since retested previous support and seemingly confirmed it as resistance. We have to look left, but we can see a clear demand zone between about 99.40 to about 102 even, where Dixie bounced sharply off every single time that it got down in there. We're just barely below that right now, and we're going to need more price action to confirm whether or not this will now act as supply or if this was just a false breakdown. And just as I said in my last video, if Dixie were to continue down, I would highly expect to see a sharp bounce at the convergence of these two trend lines, around 97 even. And if you missed the importance of this trend line in teal, please check out my last video linked above, because the significance of it can't be overstated. And one last thing to point out on the daily time frame, Dixie is very far from its 200 daily simple moving average here in purple, which also happens to line up with that key trend line there in teal, and it's deeply into its lower Bollinger Band. Even on the weekly time frame, it's below its lower Bollinger Band here as these dotted lines here in light green. It's extended below its 200 week simple moving average, and the RSI is deeply, deeply oversold, all the way down to 16. So all of this combined tells me that Dixie is well overdue for a strong mean reversion trade, and when it does snap back, it's likely to snap back hard towards these moving averages. The ADD market breadth indicator appears to be forming a symmetrical triangle, and wouldn't you know it, that apex for it is on Tuesday, April 22nd. Tesla's earnings are out after the bell on the 22nd. So is this just a coincidence, or is this telling us that Tesla's earnings and forward guidance could make or break the market sentiment? Investors and traders are absolutely going to want to hear Tesla's guidance factoring in the effects of tariffs and trade restrictions. Just taking a real quick look at Tesla on the weekly time frame, we can see how it hit this previous resistance line here, very significant resistance line of this massive symmetrical triangle. It bounced a little bit, came back down and retested it, and got just an even smaller bounce. And every single time that a support line is broken, it does weaken a bit as those block orders get filled, and there are only so many orders left before the level can actually break. But notice how oversold the weekly RSI is already. And when we look at the daily time frame, we can see very obvious bullish divergence where the RSI has made a higher low, whereas price has made basically about an equal low. Zooming in on the 4-hour time frame, if we take a measured move of this consolidation area here outlined in light blue, we get a measured move of about 81 points. And I really think that these earnings are going to mean the difference between going back up to about 370 or down to demand between about 127 to 130. Mark this video and see if we don't move at least that much in one direction within about 2 to 3 weeks. If you're getting value out of my videos, now would be a great time to tap that subscribe button and enable notifications so you won't miss any more of these market moving insights. I covered an alarming pattern on crude oil futures in my last video, as well as this potential inverted head and shoulders pattern. Price broke this downtrend line in purple around 62 even and appears to have backtested it and confirmed it as support. If this pattern plays out, it's targeting roughly 70-40 to the upside, which would also fill this fair value gap, but it has to get above this previous support line in yellow around 64.50 and confirm it as support again, or else crude oil could be headed much, much lower. And we can see that there does appear to be confirming volume once we touched this level. If you watched my analysis on copper in my last video, you'll understand why it is so important that COPX breaks back above this previous support line in yellow around 38.20. If it can get back above that, it may go for a fair value gap fill up to about 43.55. We want copper to get back up and not reject off of this trend line around 38.20. Stick around for today's trading rule to live by. Best of luck, cool cats, and God bless.